Hi, investors. It's Nick Garner here from Invesmore once again. And today we've got another area review. This is Withington in Manchester M20. And as ever, I'll go through a bunch of different variables. We'll come up with a score. And hopefully from there, it'll help you make a decision as to whether you think this is a good place for a buy-to-let acquisition. Anyhow, let's get into it. Here we've got the scoreboard, we've got Withington, and the plan is to give each of the different aspects of the area a different score. So we've got the location, which is generally its proximity to places that people want to be. And then we have demographic, which would be the kind of people that live there, the crime levels in the area, potential capital growth, the time it takes to sell a property and rent a property, and then we have yield. And I've given them each different weightings. Let's talk about the location first. It is relatively close to central Manchester, so it's around 3.94 miles, that kind of thing. That is 5 kilometers. That's really not far at all. And if you were to cycle, you can see it takes around 20 minutes. Public transport, well, that's not bad. It's just not good. So you've got the tram, I think it is, and that's every 10 minutes. And then you've got buses every 10 minutes as well. Generally, you would say that transport to central Manchester is reasonably good. There's a very interesting map, which is this one here. We can see that on the whole, people on the north end tend to travel not by driving a car or a van. So if it's very red, that means that they use their own vehicles to get around. If it's less so, it's other forms of transport. And you can see if you zoom out that everyone on the north side of Withington, and the equivalent in terms of travel time, is public transport, and then further out it's cars and other vehicles. And then you see that there are some little patches where it's town centre, as it were, and then they might get public transport into the centre. It's kind of erring towards public transport, and you can see from Google Maps public transport's good. If we look at the travel time map, you can see that within 45 minutes you can get to most of central Manchester. From a location point of view, since people want to be near things they want to be near, and assuming that you would live in Withington because it's near town and so on, I'm going to give it a 4 because it's quite central. And if you don't like central locations, well, that's okay. I don't particularly, personally, if I wanted to live somewhere. But for the people who live there, they obviously live there because it is central. So therefore, it's a good location. Demographics is a big topic, and as ever, the way this one works is that we're interested in social grade C1, and these are the people that rent property. Typically, they don't have enough money to buy their own properties very often, and they're too well off to get social housing. And also, these are the kind of people that care about their credit references and so on, and they have more stable jobs than lower social grade people. They just make optimal tenants. And once again, we're going to go back to DataShine. Now, they use the same data that we use. It's just that we organize our data differently around a system that helps us filter and find property. But for these videos, this service is great because it just kind of gives you a sense of what's going on in an area. Now, there is an exceptionally large number of C1s in Withington, and that makes it very good as a demographic. Now, if you go DE, for example, you can see there's relatively few DEs in Withington, and for that reason, it's very, very interesting from a buy-to-let point of view. So if we were talking about owner-occupier, I wouldn't be as attracted to this area, but this is a buy-to-let channel about finding buy-to-let property, and this is the patch for buy-to-let. Now, another way of looking at all this is the percentage of people who privately rent. And you can see in Withington, the higher the percentage of population that privately rent, the hotter the colour. And there's just a huge amount of privately rented accommodation around Withington. Let's have a look at our demographic analysis, because that gives you other detail as well. There's a mixture of social housing. There isn't too much social housing. You can see that there are certain patches where there's clearly a lot of social housing. So if we look at this area here, you can see this is very planned and reasonable percentage of social housing and high DE. But overall, when you look at the general story with Withington, the demographic is good. And the number that we look at is percentage of population not DE, i.e. everyone who is reasonably economically robust. The social housing situation is fine. It's very mixed. I'm giving this a 4.5 because it is one of the highest concentrations of C1 in Manchester. Now, from a crime point of view, I don't expect to see anything terribly interesting. If there is widespread crime in quiet areas, then that's a problem, but I don't see anything of any real interest. We've got some crimes on relatively main roads, some violence, this is kind of what I call high street crime. Nothing substantial. We have quite a lot going on in this little patch, though. I don't know what's going on here. Okay, this is near a supermarket. 11 crimes. It's not that much. This is for a whole year-long period. These crime levels are okay. And here we have something going on here. Now this is unusual. And as ever, with crime, it's very important to look at it on a road-by-road basis. You can have high crime patches where there's something obviously not right. In this area, which is social housing, very little crime. Overall on crime, it's pretty average, and I'm going to give it a 3 point. It's okay on crime. It's not bad. Now on capital growth, what I'm going to do is zoom out a little bit, and we're going to look at the long-term capital growth story with this area. Okay, so now we have long-term capital growth from 2007. The reason this is significant is because it shows the overall house price affordability from a high watermark in house ownership, which was back in 2007. Property prior to that was as unaffordable back in around 1893 or thereabouts. It's a very good benchmark. 2007, 15 years or so has passed. It gives you a sense of how areas have done through the bad times and into the better times. So how has this area done? Well, the answer is okay. It's surrounded by areas which haven't done well, has gone up by 5% in capital growth. So in other words, if you bought a property way back in 2007 and you sold it today, let's say you bought it for 100,000. Today's money, if you were to break even with inflation adjustment, it should sell for 141,000. If you're below zero in real terms, in real purchasing power terms, you're losing money. So this little patch here has gone down around 27%, which is 21%, sorry, should I say. And that's not good. It's bad. But the thing with Manchester is people get this idea that the whole city's doing amazingly and it's just screamingly strong. Not necessarily. But that's not the whole story. Long term, little patches of this have done quite well, relatively speaking. There are other towns and cities which have just been dismal failures economically from a capital growth point of view, but this has done okay. Now, in the last 5 years, this area has gone up by around 19-20%. Now, one of the things to notice with capital growth is that large areas have general growth, and the rule of thumb is avoid the bad areas. So there are little patches within these broad areas that you just should avoid. Maybe it's the wrong kind of housing or whatever it is, too much crime, that kind of thing. But overall, you can say that the story with this area is good short-term growth. Now, the question then is, what about growth over the last year? I would say it's slowed up a little bit. Now, when an area is really strong, you'll get 8-10% growth, that kind of thing. So in this patch, you've got 13%, which is really strong. And whenever I think about growth, I also think about house prices and headroom. And you can see here, the further north you go, the cheaper the prices are. And based on my correlation analysis, house price and capital growth don't really diverge. So in other words, you can have expensive areas, they'll grow at the same rate overall as poorer areas if the area is growing. But if the area isn't growing, well, all ships rise with the rising tide and conversely fall with the falling tide. I would say on capital growth, it's doing okay. It's not especially strong. Looking at the capital growth story then, I would say on average, it's a reasonable area for growth. I think it's economically robust, and for years to come, when we're likely to have high inflation, low interest rates, huge disruption to the national economy because of Brexit, I think it's one of those areas that will hold out quite well. So I would say it's a low risk bet on growth, i.e., I would expect it to continue growing. I just don't see it growing massively quickly, but I do see it holding out against capital decline in other areas when the economy gets really rough. So I'm going to give it a 3.5 because I think it's quite a solid area in that respect. For sell time and rent time, this is quite a quick one. It's quite an important metric, actually. The reason it's useful is because it's a bad idea to get a property in an area that's just difficult to rent. And for context, let's go and look at M2, M1. In M1, you'll rent a property on average in 2 months. Now, a good property will rent in 6 weeks or a month. That is the percentage of total stock available for rent over a month-long period, and then the percentage that has been rented out. Same idea with sale. Property just is not selling. M1, M2, M3, etc., M4. And the reason is it's lots of high-rise apartments. People don't want to live in these things. And also, many properties have issues with fire certification, and therefore they're effectively unsellable. But if we look at M20, which is the same postcode as Didsbury, and we looked at Didsbury earlier in another video, if you average it out, I would say you would rent somewhere, a good place, sensibly priced, within a month to 5 weeks or less, but somewhere in that order, just based on the general averages in this area. In this end, the market is reasonably hot, i.e. 11%, and when you factor in time to completion and properties that just are the wrong price or the wrong location or whatever, then overall I would say this is a reasonably strong market. So let's give it some scores, and I'm going to say for sell time it gets a 3.5. It's pretty unremarkable, really. It's not too hot, and bear in mind it's like a U curve. So on one end, if property takes forever to sell, then that's an issue. However, if a properties are selling so quick that the market's red hot, then you don't even really get a chance to get the property that you want for your buy-to-let deal. Therefore, I give the time, so that's why I give it a 3.5. Now on time to rent, I'm going to give it a 3. I'm not that confident that property would rent that quickly. Now finally, we've got yield. And yield is one of those approximation calculations, as it were. The way this works is that I look at the price of property and then the estimated rental income and divide one into the other, and that's how we get a gross yield number. It doesn't factor in rentable condition, because rentable condition means that you could buy a wreck and it's going to cost you a load of money, therefore your yield gets pushed down. And that's why you might see something like this one, 7.4, but maybe the property needs a load of work. Who knows? But the other thing to say is that the rent numbers, they are through a big algorithm that I put together or built, and then our tech team added all of this into the system. It's not totally accurate, but it's the most accurate that we've found based on all the data sources that we know. Apartments are good, but you got to bear in mind you got service charges and so on. A rule of thumb, a small apartment block, that's okay. Service charges should be fairly low. Big apartment blocks, watch out. But anyway, we're seeing for these houses, what are we getting here? 385. Yeah, would you really rent for more than 1,000? Possibly not. Lots of flats. I think if you want to buy a flat, fine. I'm not particularly into them. I think the best kind of buy to let is a house, and there's a simple reason. Somebody wants to set up home and they want to stick around for a while. Here's a 3-bed terraced, and yeah, so this is quite a good example of what could work as a deal, but there aren't that many of them in this area. So anyway, all right, let's get back to the scoring. And now we're getting ready for the final score. I'm going to give it a 3 because I don't see that many pickings in this area, and therefore we've got a 3.6 out of 5. It's okay. It's not great. I think Withington kind of works in that it works for demographics and so on. You can rent a place out relatively quickly. There's a lot of apartments. I suppose apartments rent well. I'm not particularly into buying apartments. Just as a general rule, I think houses are better because you've got more scope for selling to owner-occupiers if you want to liquidate. And that's why I think overall, if I move my head a little bit, yeah, that's why I think it's worthy of a 3.6. I think it's, if you can get the right deal. But the catch is you probably won't. And there are other areas where just the numbers add up. The capital growth is much better. The property is cheaper and therefore more accessible, because the sweet spot for buy-to-let is around, what, 120 to 140,000 pounds, I would say, in Manchester. And once you start creeping up above that, yields drop, and also stamp duty increases, and just the numbers don't really work so well. Anyway, I hope you found that helpful. As ever, if you like, would you give it a like? And if you want to see more of this, please subscribe. Okay then, until next time, good investing.